Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Tuesday, the 13th of February, 2007, and I've got the 30-minute time frame of the S&P 500 on the screen right now. The S&P 500, the spiders closed up just about 1%, a little less than actually 0.75%. I was looking at the wrong thing here, but they did finish with a gain of about $1.11, and putting this market back up above that level that I'd suggested might be an area of resistance. And the key word in that earlier post today was potential resistance. As I was saying, we never know what resistance is until the market runs up to there and then prices get rejected and it turns lower. This was a potential area that made sense where we might expect to see some selling, but it doesn't mean run out and sell short. That's a big mistake. So what we had was this 5-day moving average, first of all, here. And, of course, we've got this prior level of support, which support, once broken, tends to act as resistance, as the people who bought over here might be looking to release their supply to the market and looking to break even on their trades. That didn't happen, so it looks like the S&P, the buyers are back in control, which in an uptrend like we have on this daily time frame, we've got an advancing 50-day moving average. We always want to give the benefit of the doubt to the buyers and make sure we don't get too aggressive on the short side. Earlier in the week, I had suggested that looking for a short below this 144.35 level was would make sense, but it was high risk because it was against the primary trend, and we were looking for a move down to about 143. We got down to about 143.18 yesterday or so, but today the market gapped higher, and it continued to rally here on big volume. We had a low volume or diminishing volume on the way back, and then the second rally we saw some volume in here. It just kind of went sideways, and once again more conviction into the close here as I think the short started to get squeezed. There's a lot of people who have been looking for this market to break down over and over again, and once again I'm going to say that the trend is higher. It just doesn't make sense to continue to sell short. So the S&P 500 is in a great uptrend. It continues to be. The NASDAQ 100, however, the Qs here, we've been neutral since about back in here, early to mid-December, and we had that failed breakout. Now the market continues to be stuck in this range of about $43 to $45. It's right about in the middle of that area. But if I clear these lines off and kind of change the scaling a little bit, what we're starting to see is a lot more of this choppy action back and forth above and below the moving averages. So that means that we've basically got a neutral market, but the way the market failed from that inverted head and shoulders pattern that I pointed out a couple days ago, the way it failed from there, I think trapped in a lot of longs right in here. Probably some shorts got squeezed out of the market. Now they're probably reinitiating. The people who bought in here are puking their positions out. And if we break below 43.50, I think that the or the NASDAQ rather could be in for a test back down towards this $43 level. So continue to exercise caution with the NASDAQ 100 in particular. The mid caps, MDY, these guys were up about 1% today. As this mid caps, we pointed out yesterday, it was looking to me like a healthy pullback in an uptrend, finding support along that rising 10-day moving average. And today we saw that the buyers were, in fact, in control here. It got back above that 5-day moving average and finished very strong here. Now we're only, looks like pennies away from another all-time high in these mid caps. So as I said yesterday, it continues to be, in my mind, a stock picker's environment here. And a lot of the mid-cap stocks are good trading stocks. So continue to just focus really on the stocks. Unless you're an index trader, you want to look at shorter-term time frames than what I'm going to look at here. But let's take a look at the stocks we've been involved in. First of all, we got short Allstate, I guess yesterday at $61 a share. I had suggested lowering our stop to $61.30. So we got stopped out of Allstate with a small loss in here, just about 30 cents loss. We also got stopped out of Cameco today, the CCJ. We got involved here yesterday at 37.15 on the short side, and I had suggested lowering the stop to 36.75. You can see here, though, they gapped up to about 36.90, so that's where we'll say we bought the stock back. So you should have locked in about a 25-cent gain in shares of Cameco. When you're short and they gap up like that, rip the Band-Aid, get out of it, move to the sidelines, and reevaluate. You can always get short again or reinitiate whatever position it is that you're in. But when they gap in the direction away from you, I think you're better off, especially when you can still protect a profit like we had here in Kamiko. As far as Brooks goes, what we're looking for here, fortunately I said let's wait for a pullback before we purchase this. We were looking for a pullback to 1550, which of course occurred right around in this area. And then we wanted to buy strength above $15.60. Well, you can see that it never got back above $15.60, so there was no reason to be trading BRKS today. If you did trade it, you were early and you got emotional on that buy right there. That's why I suggest we wait until we get a little bit of a shakeout, in particular when they've had a little bit of a pullback. AEIS, Advanced Energy. This stock today we wanted to buy above 19.28, so you should have bought it right in here at about $19.30. Right now, I'd say that you ought to put your stop at about $19.21 in AEIS, just to protect the small. Well, we wouldn't have a gain there, but to minimize the loss actually. Amazon, AMZN, we wanted to buy above 39 bucks a share, and it had a very nice rally up to 39.60. So. You know, when they make a quick run like that, always feed a little bit out. Why wouldn't you take a little bit of a profit off the table when they run 2% in 30 minutes? So where we had our stop was 38.62. Obviously, that actually way down here. So that obviously never occurred. So you should still be in the stock, and at this point, your stop ought to go at $39.11. So. But if it gets up to 40 bucks a share, sell it. That's our target, and we've got options expiration day, so I think it makes sense to just sell it at that target. Our target in HOG was 67. Let's talk about the entry first. The entry was to sell it short below 68.15. That occurred right here, based on some emails. I know a few people did get involved in this. I had sent out a intraday chart down when the stock was down at 67.20 maybe, or 67.10, and I said, hey, lock in $1 profit here on half of your position, and then lower your stop to 67.85 on the balance. So you should have taken $1 profit on half this position and 30 cents on the other half. So altogether you should have made 65 cents a share in the short of Harley Davidson today.